Hi and good afternoon. My name is Patrik Brattelius and I'm an analyst here at ABG covering the financial sector. With us today we have the CEO of TF Bank, Mattias Karlsson, and he's now going to do a presentation. So take it away, Mattias.
Thank you very much, Patrik, and welcome to all listeners. We can start with flipping to the second page. Just to frame the presentation and the company, I would just like to start to say that we, TF Bank, we are a Swedish domiciled consumer finance bank domiciled in Sweden. Have been around since more than 30 years in this industry, and that sort of sets the backdrop to the rest of the presentation. If we look back at the fourth quarter for TF Bank, we had very good and strong underlying growth, 8% in local currencies compared to the third quarter. We have an initiative to issue credit cards in Germany that I will come back to, that we have been aggressively pursuing now for a few quarters, and we booked more than 53,000 cards by the end of Q4 2020. We will look more into that in detail. The last quarter of 2020 also saw record volumes for our third segment, which is e-commerce solutions, where we provide buy now, pay later services for merchants. And we also mentioned that we had an intention to sign new forward flow contracts to sell non-performing receivables in Finland and Norway during the beginning of 2021. And now I can confirm that we have entered into those contracts. So the market for selling non-performing loans, I would say, has mostly recovered, at least when it comes to our types of receivable. And last but not the least, the board proposed resumed dividends of 1 Swedish crown for the fiscal year of 2020. So next slide, please. As I mentioned, we have three segments. Consumer lending, which is exactly what it reads like. It's non-secured loans. It's by far the biggest asset class of TF Bank. It's 73% of the assets and 72% of the operating income. It's a diversified portfolio, but with a strong Nordic base. And we have a tailored product offering for each market. But if you take the whole segment, the average loan size on book is around 55,000 Swedish crowns. So in this market, it's a relatively small ticket, which we think is prudent risk management, and it's also prudent in terms of consumer protection, because it's much easier to repay a smaller loan than a bigger one. Another example of our prudent risk thinking is that we try to keep tenors short. Typically, they are between 12 and 60 months. So it's a short repayment time, which sort of fits the criteria for a consumer loan, that it's not an investment loan. Marketing, we do all kind of marketing channels. In Nordics, it's predominantly loan brokers to originate new volume. If you look outside the Nordics to the Central Eastern Europe, it's more and more own marketing through traditional channels and electronic channels. For the ones who followed us, we have seen a margin drop in this segment that has had an impact on the whole loan book of TF Bank. What we now see in the bottom right-hand corner is that the new originations we've been doing now has been with a very stable APR. even though we see a small drop in the Central Eastern European volume weighted for the last month. But that's more a mix effect where we saw Lithuania picking up. So all in all, we can now say that we are mostly through the price pressure. Predominantly, it has been driven by the Finnish market, where we have rate caps that has been introduced with the pandemic. But I think we are mostly over that, which is very, very good, because we will see a lot more of the new volumes generating bottom line effect. Also interesting here is that the pandemic have been from a credit quality perspective very, very I would say positive. We have seen the trends that we saw before the pandemic of improving credit quality continue throughout the period. Patrik, next slide, please. Our next segment, which is e-commerce solutions. And as I mentioned, it's an offering where we provide payment solutions, and especially buy now, pay later solutions to Nordic merchants, and also in Estonia and in Poland. We saw record buy now, pay later volume in the quarter, and we had very strong Black Week and also Christmas sales, also very strong. And the increase in the transaction volume Q4 compared to the Q4 the year before, it was almost doubled. So we handled transactions worth more than 1 billion in the fourth quarter. So it's growing rather quickly. If you take it by assets, you see that the assets are 17% of the loan book, but it's 21% of the operating income. We also see a tendency here to go to more off-balance income. And with that, I mean that we do smaller purchases that necessarily don't stick to the balance sheet, but they generate fees. So hence, it is more a fee-driven and, let's say, off-balance income type of business that we see developing. Here in the coming quarters, we will see quite interesting development. Is our strong belief that we will onboard some new bigger merchants that will continue to propel the growth case of e-commerce solutions in the coming quarters. Patrik, let's go to the next segment, which is credit cards. It's a segment we have already reported through 2020. We offer credit cards in the German and the Norwegian market, and we target only consumers. We offer a very simple product. It's a gold card. We have absolutely no fees, so it's interest only. It's no fees when you go to the ATM, and no fees, no annual fees or no nothing. If you take this product, which is a consumer finance product with a totally different income profile, because when you disperse the card, it comes with no income. So the customer needs to use the card to produce the income, and it's a very slow build-up. It takes months and months before it to reach sort of its potential. So that's a different profile. So if we look at the addressable market now that we see for us in the markets, Germany and Norway, we see in Germany we have 35 million possible customers. Germany is going through a shift from less cash, and that has been accelerated by the pandemic. So we believe that there is a huge market opportunity coming our way. And with this 35 million, we've taken away the sort of the top earners, the 15 million of the most interesting customers for the affluent bankers in Germany who targets that segment. We don't believe that they would be our target group. I think they would be more interested in getting lounge access and that sort of thing with their credit card offering. So this is the average German population, and we've absolutely taken away the worst possible credit risk. That is very difficult to do credit decisioning in. Norway is 3 million, so it's around a tenth of the German market. Customers in this segment, we have 72,000 active cards, and we had 57,000 by the end of Q3. So we are growing very quickly. And if you take the net assets now, we exited 2020 with closer to 800 million Swedish. So it's growing very, very quickly. If we take the loan book growth, so if the year on year we grew with 177%, so it's quite a quick build up. So we are adding a lot of customers as we go. And just for an illustrative example, I want you to take a look at the table in the bottom right hand corner, where we see the unit economics of a card that we see we will reach in this segment in a while. If we take the net banking income, which is nothing strange, so it's income less funding costs. The marketing cost will be around 5% per card, and we take the net loan loss ratio, it will be around 4%, as we see, and operating expenses ratio would be around 3%. So the net operating profit margin should be in the region of 6%, which is translates to a very, very attractive return on equity, well in its 30s. So I think where we see all the figures working out pretty well for us, except for the operating expense ratio, where we have costs relating to the very, very fast growth. So Patrick, you can take the next slide. Just a summary picture of the past year's growth. If we take the actual growth in Swedish crowns in Q4, it was 5%. 3% was related to the stronger Swedish crown. The year-on-year growth in 2020 was 22%. We had a negative impact of 8% depending on the Swedish crown's appreciation. And here you see the respective segments. I don't think we need to spend too much time on that. Just to point out that the credit card in Q4 grew with 31%, and there was a 5% negative impact from currency. Patrick, next slide, please. Just a brief look at our geographic footprint. Swedish market, we are active in the consumer lending and the e-commerce space. We have since quite many years been rather defensive when it comes to the consumer loans in Sweden. We think it's overly competitive, and the return levels you could expect from a growing loan book would be very low. So we believe that e-commerce is the best option for us in Sweden, where we see some healthy growth coming, and we also saw some healthy growth in 2020, and it's less competitive when it comes to margins and less risky, is our belief. If we take Norway, which is by far the biggest market for us when it comes to assets, we have a strong positive belief in the long-term ability of the Norwegian economy to support its citizens and have high employment, and therefore very good payment behavior. So we see a very, very good opportunity to continue the successful journey we started a few years back. Finland, we are active in the segments of consumer loans and e-commerce. I think both are good. We have a rate cap in the consumer lending segment of 10%. And the news we know today is that it will be in force until Q3 2021, and it's a cap of 10%. That takes away some of the addressable market that we saw with a pre-pandemic cap, but we have fully adjusted to this, so we have no issues if it stays or if it will go away in Q3. The Baltic states, we see a very, very good profitability, and despite pandemic, very stable losses so far. We are pushing the e-commerce agenda that we consider to be a very good risk, a very good asset class. So we will continue to push that agenda through the Baltic region, where we have, I would say, maybe not the first mover advantage, but the competitive situation compared to the Nordics is very, very limited. Although the markets are also much smaller, but the margins are even more healthier than you can expect in the Nordic region. If we take Poland, we have only now e-commerce as our business line. We discontinued the consumer lending because of little hope to see good growth and profitability in the near future. Germany, I mentioned it before, credit card product in high demand. Card spending is significantly lower since the lockdown started mid-December or just before Christmas. And we see some tendencies now the past week that consumer confidence is going up, and we see spending going back up. But we have some way to go until we have normal consumer behavior in the German market. Patrik, you can flip the chart. And just to sum up the profit statements. Here you see Q4. We had 75 and we lost 4 million in the credit card segment. So, and then we had Q2 2020, we had 70 million with a 9 million in losses for credit cards. So if you take out the credit card segment, we would have done 79. And if we take the last quarter 4, we reported 77 million in profits, but with a smaller loss on the credit card segment of 5.2. So the credit card segment has been a drag for TF Bank. It's becoming less and less so. So we have a very positive trend. And if we look at Q4 by itself, we had return on equity of 24%, and the earnings per share came in at 2.67 Swedish crowns. So we believe that we will close the gap even further. So Patrik, next slide, please. If we look ahead in 2021, we can see quite well into Q2 already. So we see no credit-related issues with COVID-19. So we believe that if it's going to be adverse developments in the credit portfolio, it will be, let's say, late Q2 or beyond. What is more interesting with COVID-19 right now is that we have lockdown in several of our markets, and it's severe lockdown, and it's leading to short-term reduced customer demand. So the trend line, we don't expect that to continue for Q1. So we have a sort of a lag in when it comes to the growth we have been able to report many quarters before this one. So I think customer demand is not back yet. I think we had to see an end of the lockdowns. And also we can say that we have an intention to announce new financial targets in the second half of the year. And this is, of course, dependent on that we see an end to the pandemic, so we get a better view of the future. The second bullet point I already mentioned, we can report that the market is open for selling non-performing loans, and we can continue to keep our books clean and the stage 3 levels quite low. More, I would like to also say that we have a total capital ratio of 7.3, so we are well positioned to continue to grow TF Bank in the coming quarters and beyond. So, Patrik.
Yes, thank you so much for that presentation. So I'm now going to go ahead with the Q&A. And if we talk a little bit about the credit card and Germany in particular, what makes that market so special, and why would customers want to choose TF Bank's card and not a competitor, in your belief?
I would say we have one thing that is special is that it's quite low competition to be the world's fourth consumer market. We have very few specialists. If you compare it to UK, it's absolutely it's very different. I think key. We have two things that I would say are key for customers to choose our credit card. One, we offer a completely digital process, not very commonly offered by German banks. So you can do everything digitally. So I think the German consumer likes that. And German banks have a long tradition of charging a lot of fees. We don't. So I think that combination is really strong.
Thank you. You mentioned that the lockdown in Germany has slowed down the usage of the card, but do you still believe that you will be able to have black numbers on the bottom line for the segment during the end of the year, or will that be hard to achieve given the current circumstances?
I wouldn't say that is not dependent on spending so much. It's more dependent on how fast we decide to grow. So I think it more relates to that. But of course, if spending is really down, but it's not that bad. It's down. Significantly down. So I think that has very little impact if we want to do profits by the end of the year. So more related to growth.
So at which level of the at loan book do you need to reach, do you believe, in order to become break even?
I would say if we stopped growing today, we would be very close to breaking even. And then we have built-in growth already because we have a lot of cards that has not reached maturity yet. So I would say if we stopped growing today, we will be profitable very soon. So it's much of it is related to variable costs related to the fast growth.
Yeah, thank you. If we turn our eyes to the e-commerce solutions, how many merchants did you onboard during 2020? And is that the expectation of run rate of new merchants we can expect to see being onboarded the coming years, or will this accelerate the coming years, or are you facing tough competitions from giants as Klarna and other e-commerce peers? How do you see the market?
I would see the market as first, if I take your question, I can't really say that I know the number. I know that we have significant merchants. We have in excess of 200, and then we have a lot of smaller ones that have let's say insignificant volume. I don't think it's so important to look at the number of merchants. Of course, it takes down the risk. We think the mid-size and occasionally a bigger one would be more meaningful to see that number to increase, because there are a lot of merchants with very, very low turnover out there, and there I must admit that Klarna is a real champion to deal with that tail, that increases the number of merchants. So I would say we don't see higher competition today than we did in 2020. I think it's definitely similar, and I don't see the very aggressive competitors buying market share in the Nordic region, at least not today. So I think it's a level playing field this time, and I think it will be mostly up to the merchants how they want to do this and what they want to buy. Do they want to buy the incumbent with very little possibility to influence and also be a part of a marketing machine that is going on maybe at the expense of their own brand, or do they want something more custom?
Thank you so much. We're unfortunately out of time, so I have to thank you, Matthias, for coming on today and speaking about TF. Thank you.
Thank you. Thank you. Bye-bye.
Bye-bye.